What's up, everybody? This is Matt, aka the Lumberjack Landlord, here with truly, I'm a fan. Like, I watch a lot of the Uneducated Economist. I love this dude. I think he's slinging truth like nobody else out there on the YouTube. I think it's just absolutely awesome. And so thrilled to have him with us today. Simon, how you doing, my man? Appreciate you doing
I'm
this.
doing great, Matt. Thank you very much for having me on today. It's a sunny day here in Astoria, which is pretty unusual. So I'm really enjoying that, So.
Yeah, I know it's not 5 degrees outside here in New England, so I'm actually kind of excited. I'm like, this isn't half bad. I can actually live here, like I do. But really wanted to have you on today because I think you do such an amazing job of really dissecting. Everybody gets reported what the mainstream media wants to report. And very rarely do people actually go that extra mile to dig deeper and say, okay, this is what they're doing in their left hand, but what are they getting ready to do with their right hand? And really trying to understand that. And so one of the things that I wanted to kind of talk to you about was, from a housing's perspective, for me, I've seen this market. I'm a landlord that has, a little over 100 units. I've been a landlord for over 20 years. I self-manage. I look my tenants in the eye. I get their rent checks. I take care of their problems. So what I wanted to talk to you kind of first off today was rates. I know that you really spend a lot of time on the Fed and money supply and what else is moving in the world. And so, one of the things that's most important to housing investors or even people that are looking to buy their first home is really what's that rate, because what's that payment going to be, because we all buy really based on that payment. So what are your thoughts just kind of in what you're seeing the Fed do now with what's going on in Ukraine and the fact that I'm a little scared that they're not going to raise rates or raise them so small that it's not going to really stop inflation?
Yeah, I still have to question whether or not they can actually control the inflation, the price inflation with the raising of interest rates. Ultimately, we have a supply chain breakdown. And if you want to get the supply chain flowing again, I don't know if raising of interest rates is going to actually fix that problem. So really, I think it's more of an excuse that the Federal Reserve is using so they can raise interest rates. And the whole point of raising interest rates is so they'll have some sort of ammo the next time they go into a recession. I mean, that's ultimately what I feel that the goal of raising interest rates will be all about. Now, when it comes to raising interest rates, there's a lot of different rates that you can be looking at. Now, ultimately, when the Fed is talking interest rates, they're talking the Fed funds rate, which is really just a target rate. It's like as if they had drawn it on the wall and said, okay, boys, this is what we're shooting for. That Fed funds rate is really the rate in which that they are trying to get the big banks to lend to each other on an overnight basis. That would be the basis of where all interest rates and things begin to shift and change from that point on. If you really want to know which direction interest rates are going to go, you follow the 10-year. The US 10-year Treasury is probably the best indicator of which direction interest rates will go. So if that yield on that 10-year Treasury begins to rise, you can pretty much guess that your mortgage-backed securities are going to start to rise as well. And that leaves where are the mortgage-backed securities going to end up being? Because the Federal Reserve has a lot of these things on their balance sheet. And this is ultimately the question. Are they going to reduce their mortgage-backed securities? They have reduced the amount of purchases they have done, which is already having an impact on the economy. But are they going to actually sell those mortgage-backed securities or just hold on to them and wait for them to mature or eventually, whether or not somebody, the refinancing kicks in again or something that would cause the balance sheet to reduce the mortgage-backed securities? That would be the bigger issue to look at as far as whether or not you want to know if interest rates are going to rise, is what are they going to do with those mortgage-backed securities on the balance sheet? Are they going to hold on to them or are they going to sell them? So if they hold on to them, I can imagine that there's probably going to be a fairly decent demand for yield-bearing assets, and mortgage-backed securities are one of those more secure yield-bearing assets out there. Now they got a bad rap back in like the great financial crisis, but that was due to a lot of bad regulations that were taking place. The system is not even the same as what it once was. So that's kind of how I kind of see things happening right now, is like, if there is a demand for these mortgage-backed securities after the Federal Reserve has begun to raise their interest rates or unwind their balance sheet, if there is still a demand for these mortgage-backed securities out there, well, I can see that the interest rates could remain fairly low in comparison to them actually trying to raise interest rates. Does that kind of make sense? Like, we're going to raise interest rates, but yet the demand for these mortgage-backed securities is keeping the rates fairly low.
Sure. Yeah, because I think the other thing that I'm thinking about too is that, you know, I like it when people talk about the dollar being dead. Not even close.
No.
Not even close. So especially with, as these sanctions are affecting Russia and what's going on overseas and the other sanctions that will affect other parts of the world as well, I think the challenge remains that would you, if you were Powell for a day, would you look at this and say, now's probably the time that I should be reducing my $9 trillion balance sheet a little bit, since there seemingly is probably going to be some demand for dollar denominated assets, right?
Yeah, absolutely. Anytime you have a global turmoil, especially things that come down to like hot wars, like one that we have going on right now over in Ukraine, this puts people in a state of fear. And when they're in fear, they do not want to be in their sovereign debts. Like, you know, especially if you have a questionable economy, an emerging economy, or just one that may end up being pulled into this war with them, people have a tendency to get fearful of their sovereign currencies. And so they start moving into the safe haven. And for as long as any probably living investor knows, the United States is the safe haven asset to go to.
That's right.
And whether you believe in the destruction of the dollar or the dollar is going to die at some point in the future, I mean, it doesn't take away from the fact that people are still going to run to that safe haven, and it's going to be the US dollar. And if it's going to be US dollars they get into, they might as well get into something that's going to be giving them at least some sort of a return on it. So you're going to go into the US Treasuries, because US Treasuries are by far the most liquid asset that you could possibly get outside of actually having dollars themselves.
Right.
So really, I see a demand for dollars increasing if we have more global turmoil taking place. It's at some point we will have the true death of the dollar, but it's not going to happen. Like, it's not on its way down, it's on its way up before that happens. There's going to be a huge demand for dollars because people are going to want to get out of the dollar. And they're going to want to get out of those positions of dollars. And in order to do that, they're going to have to get out of the contracts that are written. So pretty much, if you want to get out of debt, you need to get to dollars first. And then once you're out of the dollar denominated debt, then you can move into other assets. But that's where, like, Russia is having a problem right now with it. Like, I mean, you just recently, they've had an issue with their bonds. Like, they told all the foreign holders of their bonds, we're not paying you. These are dollar bonds. These are dollars and euros. These things are doing. Russia took out debt in dollars and euros because they got the best price that way. You get the best yield, best interest rates. So all these foreign holders of it, they said, nah, we're not paying you. Sorry, guys. And so they're like, well, okay, that's kind of like a default. So they went to the credit default swap issuers and said, hey, you know, Russia didn't pay. We have an insurance policy, these credit default swaps on those bonds that we have purchased, those Russian bonds that they were due in dollars that they say they're not going to pay. And the credit default swap issuers looked at that and said, you know, that's really them choosing not to. That's not technically a default. That's kind of out of our scope of obligations.
Unreal.
And we're not going to pay. So not only did, like, you know, these foreign holders of the asset not only get screwed out of the Russians saying, and we're not paying you, but then the credit default swap issuers, the insurance policy that they purchased with it, also said, we're not paying you either. So it really leads, like, okay, where do you really want to be after this? I mean, who can you really trust? What position are you going to hold on this at this point? And now you can pretend that, you know, there's other safer places out there. Ultimately, it's the dollar. Yeah.
I agree with you. I thought that was absolutely brilliant on your live stream. I think it was yesterday or 2 days ago. Your live stream was absolutely awesome. If you guys aren't watching this on my channel, you guys got to be watching the live streams, and make sure to support the man with super chats because he deserves it.
I appreciate that, man. Thank you.
Dude, it's awesome. I love watching that stuff. And so, so one of the things that you said that I thought was absolutely awesome was when you were talking about the fact that the SWIFT system that the US is on, and then you're like, hey, SWIFT US or China's version. Is the world really going to say, I feel better about putting my money in the Chinese system, where they basically can just tell you, yeah, we kind of changed our mind, we're going to confiscate it, it's not yours anymore? or the US Swift system, right? And they say, there's the Larry Finks of the world. There's all these, big time hedge fund guys that are putting money in that, investing in that. And I get that they have to be a global company, but Joe Blow or the next step up from Joe Blow or companies, are you really going to risk rolling the dice or flipping the coin and going, yeah, I think we're going to use the Chinese way of doing things financially instead of the Swift system? So I thought that was a great point that you're bringing up. Could you just walk through that for a couple of minutes so people kind of have an understanding of what I'm talking through?
Yeah. So ultimately, I forget what the exact abbreviation for Swift is. But it's pretty much a telecommunication, right? So it's like having the best messaging app. I mean, I don't know, like that's kind of like the simplest way to describe it. And this messaging app is pretty much accessible to everybody out there who wants to do global trade. You're going to do it through this Swift system, through this telecommunication. And when you get shut out from the Swift communication, now you can't talk to anybody. Like you're not going to be able to communicate and do your transactions with these other nations that are out there if you can't use this Swift system. So this is what the United States is pretty much putting pressure on China by saying, okay, well, if you don't want to play ball, we're going to X you out of this communication. And now it's like nobody's talking to you. It's like being like you can be in high school and all of a sudden nobody's like you're not involved on all the social medias anymore. You're X'd out of that. And now you can only like communicate with the people who are directly talking to you, and you feel so excluded from all the rest of the communities out there because you don't get to be involved in any of that stuff. It's very much like being like that. But then China has this system as well. So I mean, you could go and say like, communicate with China, but China is not exactly like, a free state. Like, I mean, at least with the United States, you got like a free-ish. You have the idea of being free. Like they try and promote that idea. China doesn't even promote that idea of being free. So if you're going to communicate with them, you might as well say, okay, well, every communication that I'm going to do, I'm going to go through a third party. So back into the high school analogy, it's like, okay, all these communications are going to go through this faculty first. And then to whoever it is that you're going to talk with, and all the messages and everything is going to be at their discretion on whether or not they're going to allow it. Doesn't really seem like a very, I don't know, enjoyable place to be, I mean,
Yeah.
to say the least, I mean, at least with the Swift system, you have this idea that it's going to be a free, open communication. Now, with that being said, when the United States puts pressure on nations, saying, well, these guys are doing bad, the other nations around the world say, yeah, but what if we do something that you don't like? Like we may be okay right now, and sure,
Right.
you say that you won't do anything to me, but now I'm of concern. So this is going to create a situation in which that these nations and other, entities out there in the world are going to try and find another way of going about it. But there is nothing else right now. So it's just
Right.
the Swift. It's going to be the Swift it's going to be that tomorrow and the day after that. So
It's going to be interesting to see how that continues to unfold. But I think that I think it is important because, the fear mongers out there, they're like, oh, it's the death of the dollar and Swift is going and the Chinese are going to replace it. Listen, it turns like a battleship. Relax. It's a process, and that's one of the things I talk about people with housing a lot is we're not going to see a 30% crash tomorrow. You could see that in the stock market. You could see that in a given crypto coin, but you're not going to see a 30% crash in the housing tomorrow. Won't happen. It just won't happen. And so what ends up happening though is pricing you start to see things sit, and then you start to see them reduced, and then you start to see them reduced again. And that's how a market starts to correct itself from a housing perspective. And back to when we were looking at, the 05, 06 vintage loans, a lot of those were, some called them the liar loans, some called them the ninja loans. Largely speaking, they were 2 and 28s, which is a payment for 2 years and then 28 years at a different payment. And that was a majority of the loans out there. That was they had almost 50% of the loans being done in 5 and 6 were these adjustable rate mortgages. Currently in our market, only 4% of the mortgages being done are adjustable rate mortgages. So while we might have another problem, it's not going to look the same as the last problem, But the reason I bring it up is because I believe that Americans are going to start to be getting told a lie, which is I think that there's so many people that are home buyers that can't afford the home payment, and that payment, a normal payment. I think that the government, they've already tried this out with a bunch of the forbearances, but I think what they're going to come out with is a 40-year loan that will be more generally available to people. But I think the lie in it is that they want the first 10 years to be interest only. And that will drastically reduce the friction to getting people into a home. The problem that I see that doing is it's going to raise prices of homes again.
Yeah.
Number two is, think of yourself 10 years from now being in the home that you're in and not having anything other than the market appreciation of equity that you can point to. You've actually paid no principal interest down because it was a 10-year interest only. I think that puts people in a lot of really bad positions. I think that that puts people in a spot where if all I got was appreciation, what happens if it was kind of like a dead zone for 8 or 10 years? Like we've just had a crazy hot zone for 8 or 10 years, like that cycle. And then you've got people that were thrilled to finally get into a home. They did the 40-year mortgage. They spent 10 years paying their mortgage payment, but now it's going to go up after 10 years. And the only value you created in your property was the appreciation.
Right.
So walk me through your thought process there.
Yeah. And well, that actually puts you in a pretty tough position, because like if in a situation like that, most likely you would have an appreciation.
Yes.
But if you do not make any payments on it and you don't have an appreciation and you end up in a situation in which that you need to get out of the possession of that house, now you have no equity into it.
Right.
So if it doesn't have appreciation, you have no equity in it. Now you're going to end up taking a loss. You're going to end up having to, make up the difference inside of that.
Well, but can you take that loss? Like, right? Can you show up to the closing table and write a check, or does that then lead to what we all know it leads to, which is funky products were largely to blame for the Great Recession. And this to me starts to feel like and sound like a funky product.
I agree. Well, to me, watching this housing market has been very difficult, like, because I'm not into it quite as deep as you are. I really just kind of focus in on my local area here, try to follow what's going on with mortgage-backed securities and stuff. I know, like, for me, watching what's going on in my community, I'm in a very, like, this place is getting rich fast. I mean, very fast. And the people are getting priced out dramatically. It's unreal. And I'm talking with a few people and they're saying, well, yeah, I saw the price, like, just going to the Zillow estimates. I don't know if you heard me talking about this one, but going to like some of the Zillow estimates, and they're saying, well, the house price came down, on these particular houses that I own. And I'm looking at the one that I just purchased and it's gone up dramatically. Yeah. And like to the point that it's unrealistic. Yeah. Like, it's going up like, $10,000 a month. It goes up, and I'm thinking, this isn't sustainable. This can't last. And so at some point it's going to top out, or it's going to reverse and it's going to go the other way. Yep. When you put people in a 40-year mortgage and you tell them that they don't have to make a principal payment for 10 years, they are going to dive into housing. They are going to dive in like you wouldn't believe. Yes. And it'll drive prices skyrocketing. The only thing that would hold them back from that is if they made the criteria to get those loans so hard. Yep. Like if you had to come up with 10 to 15, 20% down in order to get that loan, that would be the only thing that would prevent the housing market from just exploding in price, because everybody would run for that. They would just love it. Be able to buy $1 million house and only pay the interest on it. I
hope people are listening to this, because what he is hitting on is what I have been hitting on for 6 months. That makes me very concerned, because now they're not only talking 40-year mortgages, they're talking down payment assistance programs.
Yeah.
See, Go ahead.
Right. See, that's the only thing that I really feel thankful for about buying my house is that, I mean, I had a foreclosure in my past, so they were not going to give me a loan. And the only loan that I could get was, it had some pretty high criterias to it. Part of it was 10% down. And putting 10% down on my house really puts me in a better position now that, even, I mean, I hate to say it, but like, with this increase in equity, supposed equity that's come to the house, it would take a pretty significant drop for me to go underwater.
Right.
That's really where people
Right.
need to be. They need to put
Right.
that major down payment down to protect themselves from the house going underwater. Because if it ends up going to a point where you couldn't sell it for what you owe on it, that's where it gets really difficult. That's what ended up happening to me on my first house. So that's, if you're going to go into one of these loans, like if you're thinking about these type of things, you got to have like that game plan that what happens if the price goes under what I owe on it? You
Right.
won't be able to sell it. Can you make up the difference? That's some major questions to it. And a lot of people don't even think about that. They don't think about that at all. And that's what took 10 years of me, like, pretty much not having anything, walking to work, being broke as broke it can be for 10 years because I didn't pay attention to what was happening when I purchased that house. I mean, it's a big deal. You don't fall for these type of situations. It's going to be easy. You're going to have these great, beautiful idea about having this wonderful house and that you could totally make the payment on it. But yeah, if the economy turns, if you can't make the payment, if you don't have equity in the house, if you can't sell it for what you owe on it, that's going to put you in a very dangerous position.
Completely agree. That's one of the things that scares me because, again, the government likes to convince us that they are doing the right thing by us. Don't worry, we've got you. We want to make you feel good about what's going on. And that's what scares me about, number one, 40-year mortgage. Number two, Bank of America is trialing for the last 6 to 12 months. They've been trialing a program where they actually fund $17,500 of people's down payment and closing costs.
That's incredible. I mean,
Unbelievable, right?
it's unbelievable. Yes, that is unbelievable.
And the concern that I have, again, is that eventually the sugar wears off. And what most people haven't done the math on is it costs 8% to sell your home between tax stamps, agent fees, credits. The average is 8%. So the problem that people have is they're buying something with somebody else's down payment, somebody else's closing costs, a 40-year mortgage that doesn't pay down any of the actual interest or any of the actual principal. And now at any point in those 10 years, if you want to go sell, it's 8 points. It's 8% of the value of that house is what it's going to cost you to sell. You're writing checks. If you're in that first 5 to 7 years, you're writing checks. And this is the concern that I have is I want people, I know that people that watch Uneducated Economist, they are smart people. And there's a lot of people that are going out there to buy that first home. And when they're going out there to buy that first home, don't fall for these elaborate products. Please, please do it right. Do it clean. Because if you're buying with money assistance down and money assistance for closing and a 40-year mortgage where 10 years is interest only, I can assure you, a large percentage of those people are going to be like the ones on the 2 and 28 plans, is they are going to get got. And the first couple, 2-3 years is going to feel great. But it's then going to be, they're going to see, wow, we actually are seeing a higher percentage of these go into default. We're seeing a higher percentage of these go into trouble loans. This is much like what was talked about with, your mortgage-backed securities and the collateralized debt obligations, those swaps. This is something that will become a very real problem again, because the problem mainly from 05 and 06 and when the foreclosure started happening in 7 and 8, the main problem there was elaborate financial products. People getting qualified for loans that shouldn't have been qualified for loans based on how things were being positioned. I know people that had $1,000 a month mortgage payments that turned into $3,800 a month mortgage payments. They're like, I can't pay that. They're like, well, you told me I could refi. You can't refi now either because rates are horrible and you need a much different debt to income ratio. Yeah. So your thoughts on, I know that I forget when exactly you bought a house. Was it in the last year or two?
It was October.
Okay, so less than a year.
Yeah, 4
So,
months ago.
so I know that a lot of people are watching your channel for the economy, what's really happening and going on there. What was the impetus for you to finally say, okay, now's the time for us to buy?
To be honest with you, man, I didn't really want to buy.
Yeah.
I wasn't looking to buy. I was actually looking to rent. Because there was nothing to buy and there was nothing to rent in our area. And so if you go back and you look at my videos for the months leading up to it, I was stressing about it. I'm like,
Right.
okay, so I mean here like I mean I was it was so bad that I mean the houses that were available didn't really fit the criteria that I needed, right?
Mhm, mhm,
And they don't take dogs and they don't take cats,
mhm,
and they're like $2,800, $3,500 a month to
mhm.
rent these houses.
And this is like a 3 bed, 2 bath house.
You're right. This is
Yeah.
3 bed, 2 bath
Mhm.
house. And one of them, like I forget what the rent was going to be, $2,500 a month or something like that. House was fairly decent size. They didn't want the dog. They just replaced all the carpeting in the house. And I'm like, I will put a deposit down that is twice of what you had to put the carpet in. And she was like, no, we're not doing it. No pets whatsoever. So, I mean, for an area like I'm in, I mean, to only have literally 5 places that you could rent and 3 of those being studio apartments
Yeah.
didn't really do very well for me and my family. Like we were stuck.
Yeah.
And I'm like, okay, so this is the choices that we have to make. We either have to buy or we have to leave the area. That's the only 2 options we really have. We had some really extreme options, like say getting a travel trailer and putting it on a piece of property on a friend's property and just kind of living that way. But really, we needed something more stable than that, right? The 2
Yeah.
boys, my family, we needed something more stable. So I was ultimately forced to buy,
Yeah.
or leave the area. So that was really what got me to go into buying. Now, what I thought, because I went to a lending agent, I went to my mortgage lender, a guy I know very well. I mean, we know each other for years. And I was like, hey man, run my numbers. And when he ran my numbers, he came back and he was like, dude, you're good, man. You got excellent credit score, pre-approved, go find a house, right? So I had him pre-approved me for 499, right?
Okay.
And I went out there and looked, and there was, in the area that I really wanted to be in, there was only really one house that was available that I thought was, okay, this is as close as it's going to get. And so we went and looked at it, put the offer in on the house. I mean, literally one house, right? Because I was limited on the time I had to get out of the other one too, because the landlord's like, hey, you got to go, right?
Sure.
And it wasn't like he was evicting me; he was selling the home,
Sure.
and
Yeah.
which is still for sale today, by the way.
Uh-huh. Yeah.
It
As
never
a, as
did
a
sell.
landlord, so I trash other landlords for some of the tactics that they use to
Yeah.
get tenants out. I'm just honest with people. I hate it when people are like, well, but I'm selling it. It's like, if you're going to sell, you're going to need 60 days no matter what when you're selling on the other side of
Right.
it. So like, yeah, so I get it. I hate that stuff, but yeah, continue, please.
So anyway, he gave me 90 days, and he was really
Okay.
cool. He was just like, but so what it came down to is when I put the offer in on the house, $5,000 in the escrow, just the whole bit. And this is like, okay. So I told the mortgage lender, the real estate agents, I was like, okay, go for it. Do what you got to do. And I had actually bitched about the roof because there was a roof issue with it. And nobody really paid attention to me on this roof issue until it came time to like, okay, now we need to sign these papers and disclose this roof and get you some money on that. And I'm like, okay. And we couldn't agree on this damn roof. And I'm like, no, this is not a $1,500 repair. This is like $15,000. This is like, I'm freaking out about this damn roof issue. So finally we settled on a number. They're going to eat it at closing or whatever. And I'm like, fine, I'm probably end up paying for it anyway, but screw it. Let's go. All right. And let's make this thing happen. And then my mortgage lender comes to me and is like, dude, what the hell happened with your foreclosure? And I'm like, I have no idea what you're talking about. And he was like, that loan that I had set aside for, or that we had set up for you, it's not available because of your foreclosure. What happened? And I'm like, dude, it foreclosed on, man. I mean, my whole life is like, went upside down. I don't know. And he was like, no, you don't get it, man. I do not have a loan. This thing is supposed to close in a week and a half, 2 weeks or whatever. We don't know what the hell we're going to do for you right now. And I'm like, okay, so now what? And he was like, so what happened with the house? And I said, I don't know. My wife lost her job. She was pregnant, couldn't find another job. And he was like, oh, wait a minute. You had a loss of income? And I was like, yeah, this is all like, right after the great financial crisis stuff. And he was like, okay, wait a minute. Go to the IRS, get the documents to show that you had a loss of income, write a letter talking about the birth of the kid or the pregnancy and the birth of the kid and how your wife couldn't get another job. And we'll see if we can use that as this extenuating circumstance, right? So we did that. We went and got that documentation, wrote up the letter. He sent it off to, to the underwriters, whoever approves this stuff. And they came back and said, yeah, that's an extenuating circumstance. Now you have to just meet all the rest of this criteria. And part of that criteria was coming up with 10% down, but I didn't have 10% down. I had like half of it, right? I had way less than what they were asking for. And so I literally started digging through every couch cushion, every corner, everything that I had. And I pretty much I had been stuffing cash. And I had like a PayPal account that people have been tipping me on. And I had some other little things, and I just pulled everything that I had together. And when it was all said and done, and I came up with the down payment, I had like literally $300 left in my checking account. Like it took every dime that I had in order to get into this place. So anyway, that's kind of like the story that I had going into my house. And yeah, I mean, I cut it by the skin of my teeth. Like it was a tough road. I didn't know if I was going to get it at one point. And so, yeah, but we're in it now, and it's nice. It's a nice place, and I like being out there. Yeah,
that's awesome. Yeah, I love that. Because I think again, what we try and teach people to do is single family homes are awesome, but I think that there can be a lot more people buying real estate so I started off house hacking. That's how I did it. Because I looked at a place and I was like, I can't afford this place. I was like, I need roommates. And so that's kind of how we did it. We started doing roommates. And then after I was like, okay, I can't be living with roommates. I need to not be living with roommates. And then I started buying multifamily properties. And so I moved every 12 to 18 months for like 13 years. And so I would buy a multifamily, like 2, 3, 4 unit, and I would move into it. And over the course of the year, I would redo a bunch of it. And then I would get other people moved into those units, and then they would be paying the mortgage, and I'd move out. And then I would have that as a rental income for that building. And so that's how I built the company that I have today. But one of the things that, to your point though, which is really kind of crazy, is how far down the path you got, not knowing that there was any potential issue.
Yeah. Now that I think was due to my own fault.
Okay.
And I don't think that I could have got away with it if I had lived in other states.
Okay.
But Oregon's a non-recourse state.
Got it.
Okay. And I'm not trying to give any kind of legal or financial or any other advice. I'm just trying to tell you what happened to me and what I did.
Yep.
What my experience was. That's exactly right. Now, I'm not the person I once was. Like 5 years ago, 6 years ago, had you known me, you would have met somebody who drank a lot, who didn't really have much ambition, and I'm a much different person than I once was. When the house started going, when I knew I was going to lose the house, like I knew I wasn't going to be making the payments anymore, and the debt collectors and all the other stuff.
Yeah.
Like I wasn't into it. I wasn't into it. I wasn't dealing with my problems. And I just pretty much threw everything away and didn't answer any phones. Like 100% of them. Like I did not answer the phone, and I threw every single envelope that had my name that said something remotely close to a bank. I just threw it right into the garbage. I didn't even open it.
Yeah.
Bad idea, guys. Don't do that. Okay.
I can vouch. I can vouch for that. I did that as well for a time being. It does not work.
It does. Yeah. I mean, believe me, like, it'll cause the problem to go away for the day, but it's going to come back some in the future. And so anyway, that's what I had done. And apparently, if you make zero attempt on paying a debt in Oregon for 7 years, it completely goes away. Like it'll completely vanish. Like they cannot come after you in any way, shape, or form. And so my credit report doesn't show this foreclosure at all.
Interesting. Okay.
But the underwriters found it because it exists. They're right.
Probably county record.
Yeah, I mean it's
Yeah.
obvious. Yeah, it's out there. But as far as like, that's what happened to me. Like, I mean, that's what I did. It wasn't like the smartest move in the world, and believe me, like it took me a lot. Like I was in collection agencies. I had credit card debts. I was walking to work. It was not fun fixing all that stuff.
You
Right.
paid the life bill. Yeah. You paid the
much,
life bill. Yeah.
yeah, right. Don't do it that way, guys. Deal with the problem if you can, but that ultimately is what happened and then it came back to bite me. And that's really where like it almost caused me to lose the house, to have that happen. So anyway, that's the story behind that one. And I just believe it was because Oregon's a non-recourse state that really, it just literally just disappeared after 7 years, like
Amazing.
just vanished. Yeah.
If one of your friends came up to you and said, I've got a little bit of money, how would you tell them to invest it? Just as your buddy, because they're not giving financial advice, but your buddy, you're hanging out. I know that you do silver. I know you do gold. I know you do crypto. What is there, if they come to you and said, sheesh, I'm trying to figure it out, kind of the same exact situation that you were in, in the summertime when you're like, I got to either buy or I got to leave, because you're not finding anything for rent. Because I'm a landlord and I can tell you that every property that we make available, what we actually do to it's kind of family and kind of hickish, but I like doing it this way. I let all of our tenants know, hey, we've got a place coming up for rent. If you have someone that's looking, please let us know. We'd be happy to give them a shot. Right. Because it's a little hickish and some people make fun of me for doing it, but I like that camaraderie, because when you have 3 tenants in a building, we're all working together, including the landlord, to try and make it a nice, great building. And it all works when everybody does their part. So what would you tell that friend of yours that's, because, people come to me all the time and they're just like, well, you're going to tell me to invest in real estate. And I was like, it really depends. Like, it really depends. For me, if I had to do my journey all over again, I would probably house hack again and do that again, because I saw what it built me. And I saw that it's given me a level of financial independence I don't think I otherwise would have had. But you just went through that situation and having to kind of get over things from the past. But, somebody's talking to you and having that conversation with you, are you telling them, I would evaluate silver, I would evaluate gold, I'd evaluate crypto? Like what would you be what would you do if you had to start over from that point?
Well, I mean, really, every individual is going to be different in what they have to do.
Agreed.
Like, if you're 18, you're going to do something very different than if you're 81,
Sure.
And ultimately, the younger you are is probably the best thing in the world.
Agreed.
Because you got time.
Runway.
And time and compounding interest are the best things that you could ever possibly do for investing.
Agreed.
Once you get older, you're 45 years old. If you don't have retirement, you don't have things, you're going to have to do something that's quite extreme in order to make things happen. So that's really where, you're going to have to look at yourself and figure out where it is that what you want and what it is that you're expecting to do. I've had people ask me, I was just like, man, should I freeze up my 401k? Should I do it? And I'm like, man, I don't know. I mean, how much time do you have? Do you want to are you looking to start cashing out next year, or are you still 20 years down the road? So that's another question that you have to ask on it. Now, me personally, what I've done is I have been broke for a very long time, a very long time. I didn't $100 in my wallet was not something that was going to happen. If you are in debt, if you have any debt, credit card debt, car loans, house loans, whatever, paying off debt is probably the best investment that you could ever do with your money. With that being said, if the debt that you have is a really low interest, like 3%, like it is,
Yep.
that may not mean that you need to pay off your debt right away. Like if you could put your money towards an investment that pays way beyond the 3%, then it would be smarter to invest your money than to pay off the debt, because you could use the invested money to pay off your debt.
Yep.
But if you have like credit card debt, or you have like a high car loan debt or something like that, paying off your debts is going to be by far the best thing that you could ever do. I mean, that's the number one. So that's really where I feel like was probably the most beneficial thing that I could suggest that has helped me in my life, is that I didn't care if it was $20 on the $15,000 I owed on my credit card. I went down and I put $20 on it. That's the mindset that I went into in order to get out of debt. And I just hammered it. I would not buy anything with credit, and I would put $20, $10, $100. Anytime that I ever had money that I didn't have set aside for a bill, it went to paying off the credit cards.
Mhm.
Then after that, it's a matter of savings. Like you got to have your cushion, you got to have your emergency funds. Once you have established, what I feel would be like 6 months of being able to pay bills or live life if you were to break your legs or get sick or something, you can still function. Your life is not going to flip upside down because of a single month goes by. If you have a cushion like that, then you can start moving into other things that are going to be more protective of your assets. Like, start getting into silver, start getting into the cryptocurrencies. These things are a little bit more speculative. And to me, like having silver or cryptos is more like an insurance policy. It's something that is away from a third party. You don't have to rely on an envelope coming into the mail or being able to log into an app. I mean, cryptocurrency is a little less than that because you have to deal with like, internet services and stuff like that. When it comes to physical silver, physical gold in hand, there's nothing else that touches it. It's in your possession, your protection, your wealth is right there. That once you have like all those things kind of built and well established and feeling good about, then I started moving into stocks. And I started buying a very, very, very generic stock portfolio. The Vanguard Total Stock Market ETF, Vanguard Russell 1000 Growth Stocks ETF. And I picked the only individual company that I chose was Altria, which is like Marlboro cigarettes,
Mhm.
and
Yeah.
Anheuser-Busch. I don't smoke and I don't drink, but I know a little bit about addiction. So I bought into those. That's my stock portfolio.
Good.
And when I invest into these things, I do dollar cost averaging on
Yeah.
everything that I do. I never, because I am the worst market timer in the world. Like I will, no matter, like I will watch something dump out, I will put all my money into it and then it'll fall another 50%. I mean, it is guaranteed, like no matter what. So if I dollar cost average into it, then I don't stress about the price. I just like when it comes to cryptocurrencies, every Thursday morning, 6 a.m. with a cup of coffee, I make a $50 Bitcoin purchase.
Yep.
Very, very simple, very small, just putting skin in the game. Now, I do have quite a bit of cryptocurrencies that I have purchased over time that I've managed to hold on to this entire time. Like I've never sold any crypto. And only a couple of times in my life did I ever sell silver. And really, it was trading for a car. So I needed the car to get to work. So it was like my insurance policy.
Yeah.
That's the way I kind of handle things. Like if you're going to be like an investor who's looking to like put money and make money and do things like that, there's a lot of really good YouTubers out there who do a great job of like, trying to pick out like stock charting and analytics on stuff like that. These guys are brilliant on some of the stuff they do. I'm not that smart. I just dollar cost average. I do. I
I'm
just dollar cost average
I'm
into
with you, man.
everything,
I'm with
and
you.
and it seems to work out okay for me. If I was to ever suggest anything that you should ever invest in, it should be yourself.
Agreed.
One way or the other. I don't know how you do it, whether it's a business that you're doing or or some kind of knowledge, skills, something that is going to do better for you. And that's probably one of the better investments that you can make out there. And then if it's not monetary, networking is the other best investment that you can do. Is if you don't have the skills, you don't have the knowledge, you don't have the power, you find people who do, and you trade with them something that you have that you can trade with them. And building up a network is probably the other best investment that you can have. So
I always talk to people about your network being your net worth.
mm-hmm.
Your network really
Yeah,
is
for
your
sure.
net worth. And honestly, and myself and 80,000 other subscribers to your channel. What I think what's really funny is that, and I'll be just completely transparent here, is that when you made it to the Rebel Capitalist Conference, I felt like a lot of us made it with you, because you were such a huge part of talking people through things and giving them a framework to be able to understand this stuff, that it is just so unbelievably critical. And I'm so excited for you and how successful it's become for you, because it's meant a lot to me. My kids actually know who you are. They'll point up at the screen, and I got a 4-year-old, a 2-year-old, and an 11-month-old. And they're just like, we want to watch him. I was like, sure, absolutely, let's do it. So yeah, I'm just so psyched for you, and so excited that it's gone the way that it has. The last question that I had for you was, I think people need to recalibrate the way that they think. And I think, I've been telling people for the last year, my channel is only about a year old. I can tell you everything there is about real estate and investing in it and all that good stuff. But I think the core thing that I want people to most importantly get is, I'm a 9th grade dropout. I didn't finish high school. I didn't finish college. I'm a 9th grade dropout. And so I built my company from the word go. And I think that what I want to encourage other people to do is, there's never been a better time than now to monetize your gifts, talents, and abilities. And had you not had the courage to get in front of a phone or get in front of a camera with some fuzzy dice, had you not had the courage to do that and take the knowledge that you spent thousands of hours accumulating, had you not made the investment in yourself, like we just talked about, but also had the guts to put yourself out there, there's so many thousands of people that wouldn't have had a difference in their life like that you've given us. So I'm extremely appreciative, and I just want other people to be encouraged. Please don't shortchange yourself and shortchange the world. You have gifts, talents, and abilities that you should be working to study yourself approved, and to then be able to monetize in a way that can help out you and help out your family, but also help out others. I really want to see that for others.
I thank you, man. I mean, I really appreciate the kind words. And for those who who look at my channel and it's like, wow, man, that guy, he was real successful at it. He was really smart or whatever. I never intended any kind of success out of this channel. I didn't think anything was ever going to come from it. I didn't really honestly think that anybody would ever care what some dude in a busted down car was ever going to say about economics. I mean, why would you, right? A lot, I think really what holds a lot of people back is just being afraid, being scared. These people will make fun of me. They won't think I'm smart. I don't know if I can take the trolls. I don't know, all these questions out there. And even myself, when I first started the channel, I would get high anxiety when the videos would start doing well. It was all of a sudden there's 200 people who watch this video. I'm like, oh man, that's too much. I don't like it. I don't like it, and you eventually you kind of start feeling more comfortable with it. And when you start realizing, okay, well, I'm not so scared. What am I scared of next? Well, is it speaking in front of people, or is it speaking live streams? Is it, what is it that, okay, well, let's try that. Let's see what it is that I do or don't do during this time. If I'm nervous during it, then I'm nervous, it's going to happen. But then the next time you're not going to be so nervous. And if it didn't go over terribly, then, the next one should go a little bit better. Next thing you know, you're getting invited to go and speak in front of a huge group of people.
Unreal.
And you're thinking, well, I mean, it's one thing to do bingo, to be down there calling bingo in front of like, my friends at the tavern who are all drunk and laughing at anything anyway. But then it's another thing when you have 700 people who are very serious about what it is that they're doing there.
Yes.
And they're listening very intently to everything that you're saying. And you're going to speak for an hour for the first time in your life in front of this many people.
Yeah.
I was scared. I was like, there is no other term for it. I was scared to get up on that stage and do it. But I knew I had to, right? I mean, it's just like, what are you going to do? I mean, is this YouTube channel meant to carry you and push you into the next level? Or are you just going to, just not do it? I mean, what is it? You got to go. You got to make this happen. And so you get up on stage and black out. And you can't remember anything about being up there. And like, I mean, I am totally lost, but yet somehow when I get off a stage, everybody comes up and says, dude, that was the most amazing thing. You did so awesome. It was great. Let's do it again. Let's do that again. Let's make it happen. So, I mean, you can see the progression of this channel. 5 years ago, guys, I was just had a regular old job, a regular dude. I'm not special by any means. I don't have some kind of like, college degrees or anything like that. I graduated high school, but barely, like
I
barely
didn't.
graduated high
You
school.
got me there.
And I have reading disability. So I can't read for more than 10 minutes without my mind just drifting off into wherever it goes. And
shiny object.
just right. So yeah, squirrel,
Yeah.
But this is the thing, you keep pushing yourself. So you just keep believing that it's going to happen. You have to have a little bit of insanity, you have to believe that it's going to work, and you keep doing it even though it's not working for you, but that belief that it's going to
100%.
just, you keep pushing, and then one day, bang, it does. And then the tide turns and everything starts happening for you. And, you just have to remember that even though it's like the best time that you've ever had and things are going really good, it's going to peak out. And at some point you're going to fall into another valley, and you just have to deal with it again. It's peaks and valleys, peaks and valleys.
Yeah. A lot of why sort of the channel was because I was having the same conversation over and over with people. And I was just like, I just need to put this somewhere in a place where I can just send somebody the video and go, here, this is that topic. Cause I'm not like in love with, let's not talk for 3 hours. I'm kind of like, yeah, I did a video on it. Here you go. You can have it. I know enough to have done the video and send it to you, and here you go. So again, I just greatly appreciate you. I greatly appreciate your transparency, your authenticity, all the important words that so often are lost in our today's society. So yeah, just from a fan, from a fellow YouTuber, from a fellow, business guy, I really appreciate you. I appreciate all that you put out there. And this is truly, one of the times that I really enjoy. I promise it won't be 6 months again, but it's just, it's a great time to do it with you. And so I really appreciate you doing it. And I know that a lot of my listeners will get a lot out of it, and hopefully some of yours get something out of the real estate stuff and help there. But yeah, we're just, it's a blast to do this with you. And I can't tell you how much I appreciate it.
Yeah, man, not a problem. I really enjoy doing these things. And yeah, this conversation has been awesome today. So thank you.
Well, I will cut it off there, my friend. And I'll see you on the other side. Thank you so much.
Sounds good.
Oh, and make sure to check out Uneducated Economist. Make sure you subscribe. Make sure you participate in his live streams. They are absolutely awesome. And he is the man. He gets to so many questions. I do my live streams and I don't get to nearly as many questions as you do. So you do an awesome job at that. And make sure that when you're doing it, make sure that you give the man some super chats. That's what you're there for. Like, I mean, honestly, like I watch some other channels that do super chats and they're such garbage. So good for you. Like, support the channel. Let's have Simon get to that next level and become that headliner at Rebel Economist.
Yeah, that was good times, man. Thank you.
Awesome, man. Thank you so much for your time. I appreciate it. We'll talk soon, my friend.
You bet.